Hey investors, welcome to this episode of InvestU. Today we're going to be looking at the Costco stock. Costco's had a lot of buzz in the market these days. The company has done quite well during the coronavirus times, and to this year, the stock has grown 4% in comparison to the S&P 500, which is down about 11% year to date. So let's take a look more at this stock. So a bit of basic info about this stock. So the ticker is COST. It's traded on the NASDAQ. This analysis was performed on the 11th of May, 2020. It presently has a market cap of $135 billion. The stock price is $305.94, and there are 441.6 million shares outstanding. So here are our investing rules for InvestU. I'll paste a copy of this in the show notes below, and this is especially important to keep in mind as we enter into uncertain times in the market. We want to ensure that we're investing in stable companies that have solid financials, and we use this rule set to help us with that. Also, with helping us with our mindset in investing, there's a couple of books that I would recommend that would be helpful with determining which stocks we invest in. One of them, as mentioned before, is The Intelligent Investor by Ben Graham. He goes through a lot of these principles and why these statistics are so important. The other book that I recommend is by Daniel Kahneman, which is Thinking Fast and Slow. And what this book is helpful with is understanding your mindset when you're tackling difficult problems like whether to invest in stocks, whether to sell a certain stock, and which stage of thinking you're using. Are you using a stage 1 or a stage 2 approach? So I'd highly recommend these books. One is more focused on the psychology of investing or psychology of thought processes in general, and the other one is focused more on the financial aspects of things. Okay, digging into some key metrics for Costco. So as mentioned, the price is $305.94. It has a high PE ratio right now of 37.45, which is higher than the 20 that we are looking for. But we'll look at the growth patterns and see if that makes sense at this point in time. It has an earnings per share of $8.52, which translates into about a 3% return, a dividend yield of 0.82%, a price to book of 8.21, which only gives us a margin of safety of 12%. Typically, as value investors, we're looking for something closer to 50%. So we'll do some comparisons to industry partners to see if this is in line with what they're doing as well. Has a debt to equity of 0.33, a return on equity of 24.56, which suggests they're quite an efficient company. A current ratio of 1.04, which is less than the 1.5 we're looking for. So again, we'll compare that to its industry peers. An EV over EBITDA of 20.09, which does suggest that it is overpriced right now, and a correlation to the S&P 500 of about 50%. It should be noted that it does have lower correlations to Alphabet or Google, Tesla, and the BGS stock. Okay, digging into Costco's value over time, we see excellent revenue growth year over year. Basically, it's had consistent growth, which is something we look for both from a revenue perspective, a net income perspective, and an earnings per share perspective, which we see consistently with Costco here. So the model is an excellent model. The liabilities and debt have grown over time, however, which is concerning, but this is a common trend that we are seeing with other companies, and I would suggest that they are in good financial standing, and the outlook is very positive in terms of the membership growth and the store growth. So based on the fact that they do own most of the properties that their stores are situated on, that could be a factor in terms of why the debt is increasing. With that in mind, the total shareholders' equity is also increasing, so our book value is increasing over time as well. Shares outstanding here are quite consistent, but they do mention in their annual reports that they are repurchasing shares. The current ratios are slightly on a decline since 2009, but have been kind of steady at around 1 over the past few years. And their dividend has fluctuated quite a bit. It is a fairly low dividend that they do pay out, so we're really not into this stock from a dividend perspective, but it does pay out a slight dividend. And as we have seen the shareholders' equity grow, we'd expect the book value to also grow in step with that, and we see consistent growth in the book value over time. So doing a comparison to its peers, it does have fairly fierce competitors and really strong competition in its marketplace with Walmart and PriceSmart. When we look at the dividend yield, it is rather on the low side comparing itself to Walmart and PriceSmart, though as mentioned, we're not really buying this stock from a dividend perspective. Earnings per share relative to the price are quite low. The PE ratio is on the higher side, though the return on equity is much higher than its industry peers. So that suggests that it is quite an efficient company based on the investments that it's doing. From a price to book perspective, we are paying a little bit more for the book value here. Current ratios are in line with its industry peers, which is a good thing. That shows that from a liquidity perspective, it's not suffering in the short term. And as mentioned, I don't believe we're really concerned about the short term for Costco with the lineups we're seeing outside the doors these days. Tough to do a comparison from a debt to equity perspective, but I would suggest it is in line with Walmart, a little bit better there. So with PriceSmart, obviously it's a little bit more, but I'd suggest that Walmart's probably its closest competitor in terms of size here. Okay, looking at the dividend coverage, as mentioned, we aren't buying Costco for its dividend really, but it shows that from an earnings per share perspective, when it does pay out its dividend, it is able to do so and cover it quite well. So no concerns that Costco won't be covering its dividend. So we should at least expect to see a slight 0.82% return on our stock year over year. In doing an intrinsic value calculation, the growth that we're using for this stock is 9%. It's discounted at 10%. We're using a growth rate in perpetuity of 2%. And using the 2019 free cash flow, I arrive at a value of $117.11. Though using a simple book value growth approach, it's around $258.43. So this suggests that the stock is overpriced from its intrinsic value. So we'll dig into the annual report a little bit more to see where the stock is headed, and we would be paying a multiplier on this for sure, but as we would with other large cap stocks, Johnson & Johnson, Walmart, generally they are known compounders. They are known companies that generate, I'd say, better returns than the S&P 500 historically. So if we anticipate that they're going to continue on that trend, we may be paying a little bit more for this stock relative to its intrinsic value. And that's just something we need to be aware of with the big compounders. Okay, a few positives from a corporate perspective. So we've had significant sales since COVID-19. Likely you've seen some posts on social media or have been to Costco and have seen no meat in the meat department, toilet paper flying off the shelves. It's very hard to get very common items. I'd say towards the earlier onsets of COVID, maybe things are a little bit better now, but it has experienced significant sales as a result of that in Q1. Now, one interesting point for Costco is they generally try to keep prices quite low and their margins quite low. They do have a Kirkland brand that they tout as being a high quality brand with low margins. So if they feel that value is not there for a specific product, they'll bring in a Kirkland product and try to challenge competitors in that area specifically. But when you look at the overall operating income that it produces, membership sales have consistently accounted for 70% of that income. So members buying and renewing memberships are really crucial for the success of this company. And if we look at renewal rates in North America, they're up towards 91%, and internationally it's at 88%. So really good renewal rates, and something that we're going to look at a little bit more in the next few slides here, because this is key for the success for Costco. Membership prices have increased steadily over the past few years, and it's been about a 7% increase in 2019. So as we see the prices go up, obviously we expect to see the revenue go up for really something that has a huge portion of the bottom line for the company. And as mentioned previously, they are quite active in the share repurchasing program, and they are trying to buy back stock when it is undervalued. Okay, so looking at the membership growth rates over time, so we see in 2019 back through 2008 steady growth, and then the membership sales as a percentage of the operating income is steady around the 70% marker as we've gone through this over time. We've seen an average year-over-year growth since 2008 of about 5.75% for membership. It's had good membership growth during poor economic times. So if we look at the beginning of the graph there around 2008, 2009, we are still seeing a strong year-over-year growth pattern there. Steady membership sales relative to operating income, as mentioned, and we're close to 71%. It has been as high as around 82% during challenging times. So a lot less revenue for items in the store, but memberships picking up the slack. and high membership retention as well, 91% in North America and 88% internationally. From a store growth perspective, we see that the average number of stores is increasing at a rate of 3.9% year over year. And what I was concerned with is membership growth may be a function of store growth, but that does not appear to be the case. So when we look at the number of card holders per store, it's still growing at a rate of 1.7% year over year. In trying to break down the sales to figure out which categories are dominating for Costco, it has food and sundries at 40%, and that's mainly candy, beverages, alcoholic and non-alcoholic, and packaged foods. Next, we have ancillary, which is the gasoline, pharmacy, and optical. So those are kind of the extras on some Costcos. Then it's followed up by hard lines, which is electronics, garden and patio, and major appliances. Followed by fresh foods at 13%, which is meat, produce, deli, and bakery. And lastly, soft lines, which is apparel and small appliances, making up 11% of sales. From a negative perspective, as mentioned, it's got some fierce competitors. It's a very competitive industry. They've been trying to increase their market share with using the Kirkland private label to try to provide good value for its customers and entice members to continue their membership and get that good value through Kirkland product, which is sold exclusively through Costco. It's sensitive to disruptions in supply chain, both from a private label and brands perspective, and it's also sensitive to transportation cost increases. Its online presence is rather quite limited at only about 4% of total sales. And if you check out Costco's website, it generally doesn't have the same selection as you get in stores, so they definitely have a lot of work to make up here. They do have a limited presence outside of North America with only 17% of its total stores. And as you look through the breakdown, they do have a couple of countries with good representation. But for countries like France, where there's only one store, they definitely have some room for growth here, which is a positive thing, but obviously significant investments and significant culture shifts for some countries with introducing Costco into the countries. And as mentioned previously, it does have high debt on its books as it continues to invest in land that the stores are on, which is positive that they do have such a big real estate portfolio, but they do have a high debt value on their books. So ensuring that they get a good interest rate for their debt is key. So restructuring this debt over time is a key risk for Costco. So getting back to the intrinsic value calculation, as mentioned, using the 2019 free cash flow, we arrive at 117.11, and using a simple book value growth approach, we arrive at 258.43. We do have a stock ticker analysis spreadsheet that is available on our website if you go to valueinvestu.com, and I'll post the link in the show notes below. This will help with performing the intrinsic value calculations with the stock ticker of your choice on the NASDAQ or New York Stock Exchange. So in summary, Costco is a key compounder. It does have good financials. There are a few hits against it. It is slightly overvalued at this point in time, but looking at the returns year over year and the fact that it's beating the S&P 500, it would be a company that I look at for stable growth in my portfolio over time. And as it is a big compounder, again, we are likely to pay a little bit more for this stock than we would maybe for a mid-cap stock where we're trying to find good financials. So I would have a substantial sizing in Costco in my portfolio, and I'd expect to see about an 8% return per year from this stock. Thanks for checking out this episode of InvestU. Don't forget to click subscribe below and visit us at valueinvestu.com for more videos and information.